Good afternoon, ladies and gentlemen. I'd like to welcome on stage Mr. Sebastian Paredes, who is the CEO of North Asia and Hong Kong, DBS Bank. Please, round of applause. So we have a lot of international guests here, and I think some of you may not know what GBA is. So I'll just quickly summarize and define. GBA is the Greater Bay Area, which consists primarily of Hong Kong, Shenzhen, Guangdong, and the southern part of China. What a lot of people don't conceptualize and understand is that soon the integration of this territory will create one of the highest density or highest number of ultra-high net worths per net in the world in terms of income. So on that subject of the Greater Bay Area, we welcome Sebastian because it's a rapidly growing economic powerhouse in China, driven by and leading to a very meteoric expansion of the affluent population. So this growth is really redefining the wealth, is redefining how industries like banking and luxury serve the new needs of these Chinese high net worth individuals. And that's the basis of why we're having this conversation today. As you may know, financial institutions, Sebastian, are strategically positioning themselves to capture these opportunities, DBS being one of them, as a major player, and leveraging your specific expertise and customer-centric approach. What are the trends and developments that will shape the GBA region in the future?
Thank you, Tak, and thank you for inviting me today for this interesting summit. We will try to probably unify a concept of region with luxury and banking. So quite difficult theme to put together, but let's try to do so. From the perspective of GBA and why GBA as a separate region from China is because of the criticality and a strategic position of GBA and the importance that the government of China is giving to this region as a pilot to unification with Hong Kong, Macau, and as a pilot also of many internationalization themes for China. Now, GBA, it's only 0.6% of the geographic territory of China, yet the GDP of GBA is 14 trillion RMB, or $2 trillion US, 11% of China. So it's significant. And it's significant not only in the terms of economic output, but also in the industries in which it housed, especially high-tech, automobiles and new technologies, green technologies, but also is one of the areas, especially Shenzhen, that is the youngest in China. So as China ages, on the other hand, GBA produces the highest level of youth that eventually will become high-end customers. From this context, 87 million people is probably the size of South Korea, the size of Australia, and probably closer and soon even bigger than Italy. That's how significant it is. And GBA is growing faster than China overall. GBA is growing about 5.6, 5.7% GDP, whilst China, hopefully this year, will be 5% GDP. This is housing one of the largest high net worth individuals in China. In fact, 11% of GDP, however, 15% of high net worth individuals. So it's important for the luxury industry. It's important for the understanding of the future of the luxury industry and the behavioralization of the people that live in this part of China. Now, there are approximately 4 million high net worth individuals in China. In high net worth, we say, let's say, more than $1 million US of investable balances. These 4 million...
4 million in China?
4 million high net worth individuals.
Okay, of
$1 million of investable balances. So outside your home, outside your needs and all that, $1 million that you can invest. Now, the highest growth, if you extrapolate the way of this growth from 22 to 27, we see that China will have 112% growth rate of high net worth individuals, whilst US, for example, 7%, the rest of Asia, 7.5%. So it's significant. It's significant in the way that it's creating wealth. It's significant in the rate of growth of luxury. And if you think about GBA, you have Guangdong, Guangzhou, Shenzhen, Hong Kong, right? So the way you look at China in the luxury business, like we do, we don't look at China per se, we look at cities. We look at cities. DBS, for example, has we are in 13 cities in China, but we are focusing on 5 main cities: Beijing, Shanghai, Hangzhou, Guangzhou, and Shenzhen. And out of these, we see high net worth individuals, the fastest growth in Guangzhou and Shenzhen. And if you take the connectivity that the government is having with the Stock Connect, the Bond Connect, now the Wealth Connect in GBA specifically, this is becoming significantly interesting.
Now, I know, Sebastian, that you've been a banker for over 30 years. You've got a very strong track record of building franchises across multiple markets around the world. And certainly DBS, for those that aren't aware, has become a leading financial institution, originally from Singapore, and certainly one of the top-tier banks here in Hong Kong. And DBS being a significant player, what would you say is the future trend for this up-and-coming young luxury consumer from the GBA, their expectations, their DNA, their demand for luxury? What's the trend?
So context here of what has happened in the last few years, COVID, of course, but most importantly, the destruction of wealth in China has been dramatic in the few years, prompted by the collapse of the real estate sector. And as you know, Chinese has, in mainland Chinese and in Hong Kong as well, invested a substantial amount of their investable balances in second homes and real estate. Then on the wealth management products in the last decade, most of the management wealth products were structured around real estate as well. So with the collapse of real estate, the destruction of wealth has been significant. That coupled with COVID, as well as high interest rates offshore, has prompted a dramatic step back of the consumption patterns, especially on luxury, of mainland Chinese people. And that is the problem that we're facing today. As Francis was saying, you know, the retail sales in Hong Kong of luxury products compared to 2019 is minus 40%. From 23 to this year, it's dropped even further to 25%. It's not really that, you know, behaviors have changed or tastes have changed. It's that the impact to the wealth of mainland Chinese as well as Hong Kongers has been significant. And that has created a huge amount of lack of confidence and trust, which the government is trying to address, but it will take a substantial amount of time to address. So this is important to understand when we look at luxury products. You know, we only talk about sales year on year and why the sales are, well, but the context is very important. Now, on top of that, now with high interest rates, also this dynamic is very important to consider. In the last 20 years, we lived in an environment of zero interest rates. And when you have zero interest rates, you don't have ability to put your money to work in banks or in investments and so forth. Of course, then you went out and bought some beautiful watches and beautiful bags and beautiful cars and so forth. But now with interest rates at 4%, you have now some very interesting dynamics. So before coming to this summit, I was thinking, maybe we banks are competing with the luxury goods. and we are competing in a very interesting dynamics. Because now we are beginning to understand in a much more thorough way the behaviors of high net worth individuals, the personalization, the connection, the special treatment to delight, the differentiation of behaviors. And we are now beginning to derive products that are structured, that have high yield, but also give this sense of enlightenment that in the past luxury products gave. So we are in a very interesting stage of
So
competing
give
with
us
luxury
an example.
goods.
How would you compete? I mean, experience-wise, what is this, loyalty? I mean, how would you have that emotion to compete with a luxury brand?
For example, consumers after COVID, especially including private banking consumers, are now engaging everything through digital channels. We spent in DBS an incredible amount of time developing journeys which embed not only personalization, but also rewards, enlightenment, attachment to different ecosystems of luxury, which now the customers are beginning to appreciate more and more. We have partnerships, hopefully with Robb reports, many partnerships with luxury companies that are engaging our products with a different ecosystem, and everything digitally. So when you go into the digital channels for private bank, for example, 10 years ago, it was one-on-one person. And the delight was depending on how good the relationship manager was, how experienced, how knowledgeable, and how even charming that person was. But now, when it's self-served, the private bank customer, the wealth management customer, can get everything personalized and the delight that is according to their personality and desires by itself. This is something that is substantially impacting the way we operate and the way we are attracting customers and the way we are stealing share from the watches and the cars and the bags of the luxury segment.
Taking a step back, Sebastian, on the subject of the current market conditions and how impactful it has been by China's economy that has seen better times than before. I know that the Chinese government has recently introduced a range of stimulus measures to stabilize economic growth. What is your perspective on these actions? Will it work? Is it short term? Is it long term? And will it inspire this consumer spending for the luxury brands, or will it inspire investment through DBS and other banks?
Well, in fact, what I mentioned before is dramatically increasing the customer's desire to go to banks and seek for higher yields. Whilst luxury retail spending has reduced by 25% and 40%, we have gotten 30% increase in high net worth customers growth in Hong Kong. We've gotten 40% of asset under management growth just this year compared to last year. So the growth is substantial. It's just being directed to investable products rather than luxury products. That's the first thing. The second thing is, I do see these stimulus packages as a very, very important commitment of the government, first of all, to acknowledge the seriousness of the crisis, and secondly, the very targeted desire to address the big elephant of the room, which is the real estate sector. China will continue to be challenged because the real estate sector is a drag to the economy, is the drag to confidence, and is the drag of economic activity. This year, the government has issued close to 6.5 trillion of RMB in economic stimulus, monetary as well as fiscal. And as we understand, next year the amount will come through close to 13 trillion. So it's very substantial. But the question is it enough? And will it indeed get into the psyche of the customers to restore confidence? That, I believe, is going to take some time. So I do believe that we are for a longer, difficult ride, but directionally, I am very pleased with the fact that the government is now fully determined to changing these stagnant economic outputs.
Hong Kong has always been a preferred place for offshore, as an offshore financial center for many of the mainland Chinese high net worth individuals. And that's what kind of makes, in many ways, Hong Kong quite unique for mainland Chinese. What trends are you observing from DBS in terms of client flows from mainland China to Hong Kong for the ultra high net worths?
As I mentioned, we are beginning to see a substantial amount of desire for mainland Chinese to invest offshore. Of course, China has capital controls and very limited amount that individuals can take money offshore. But the fact that they are beginning to see less possibilities of investable opportunities within China, real estate, capital markets, which have been very, very severely affected, are beginning to push most of them to seek channels to Hong Kong. And because the government has established these Stock Connect and Bond Connect and now Wealth Connect, we see the increase in interest of utilizing the Connect to invest in Hong Kong.
For those that are not aware of those three terms, can you just explain a little bit what that means?
The government in the last few years have created the ability for mainland Chinese consumers and companies to invest in equity through what they call Stock Connect. It's a closed loop. So the money remains in this loop, cannot leave Hong Kong, but the mainland Chinese can invest in equities in these Stock Connects. And then there's a Bond Connect. So mainland Chinese can invest in bond and bond products through these as closed loop. And in the last few years, they created Wealth Connect, which is wealth management products. So if you are mainland Chinese living in Shenzhen, you can invest in wealth management products structured by DBS Hong Kong, for example, in this closed loop. So this is giving the ability for the customers to seek for alternatives, investable opportunities.
Yes. A question I want to ask you in terms of how you see the current marketplace of the luxury sector. Do you think there'll be a revival of the mainland Chinese coming back to Hong Kong as a tourist pre-pandemic and spending in the luxury shopping malls like they used to? Will that ever come back? And if it comes back, when will it come back?
Yeah, I think we are beginning to see an improvement of visitors. You know, in Golden Week, we had 394,000 visitors, I think. However, as I understand from the malls, as I understand from the luxury chains, the spending is probably 60% what it was in 2018. The pattern of spending of mainland Chinese has changed. The patterns of spending of Hong Kong have changed because of the destruction of wealth that we saw in the last years, and also high interest rates, which giving an alternative to returns. This is going to last. I don't think that what we experienced before will return in the form of what it was, but I think that it will progressively improve, but it will take some years, and we have to get used to it.
So, being a customer of a bank, especially in mainland China, Hong Kong, it's one of the key benefits or one of the main things that DBS is famous for is being the safest bank in Asia. But aren't all banks safe? And why are you the safest?
Well, I think that we probably come to Robb report and say it many times so people believe it. We come from a place of very, very important track records of regulatory environment, a very strong record of banks, financially strong. Our rating, the international rating agencies have rated Singapore as a AAA country. DBS is a AA minus bank in the back of our international rating, but as well as on the back of our very strong financial performance, continued financial performance. Even through COVID, we have demonstrated that we are a very safe place to be. I think that I'm not mistaken by a Swiss bank, probably failed a few months ago. So even within Switzerland, you can have victims. So the continuous performing, a very strong track record of a bank speaks for itself. The international rating speaks for itself. But most importantly, the fact that we have been very, very clear in our path, in our track record. We have not moved our strategy away from Asia. We are a mainly Asian bank to servicing Asian customers. And that strategic continuity, management continuity, and financial track record speak for itself. And that's why we have been blessed in being named best bank in the world. We've been blessed in being named DBS Hong Kong best international bank in Hong Kong. We don't like to brag too much because it's horrible to be arrogant, but we recognize that it's important for the customers to feel safe, to say it, and feel proud about it. Yeah.
Okay. Now, on the flip side, bank aside and DBS aside, I'm sure you are a consumer of luxury. What for you is luxury, and what do you enjoy spending your money on during your spare time?
Yeah, I think that I'm going to hide my watch, otherwise I'm going to send the wrong message here. I think high net worth individuals, once you satisfy the basics, look for something that personally allows you to feel enlightened in many ways. In my case, for example, I love art. Luxury is defined in many, many ways, not only in material ways, but also in the way you engage to your personal behaviors. So eating well, being delighted in plastic art, traveling to places, before we heard about these beautiful hotels and how the hotels make you feel better. Living in luxury is not spending the money in luxury. Living in luxury, in my view, is being fulfilled on the next level of accomplishments that every individual has. And every individual is different. Some feel enlightened in the luxury of charitable work. Some feel enlightened in the engagement with art, like I do. Some feel enlightened with having a very beautiful collection of bags or watches or cars. And I think every person is different, and every person gets their enlightenment through different ways, I think.
I agree. Well, Mr. Sebastian Paredes, you truly are a leader of luxury and a connoisseur, and a demographic of our Robb report reader, and an inspiration to all of us in how you enjoy life. So on that note, ladies and gentlemen, a big round of applause. Thank you very much,
Thank
Mr.
you.
Sebastian
Thank you,
Paredes,
Tag.
CEO of the DBS Bank.
Thank you very much.